Joining us right now is the Moody's auto analyst, Bruce Clark, who downgraded it. Bruce, good to see you. Thanks so much for joining us.
Thank you.
What was it? What's the problem at Tesla?
Big issue is that the company's got a relatively large cash burn, number one. Number two, at the end of this year and early into 2019, they've got about $1.2 billion worth of convertible debt coming due. That's going to create a tight liquidity situation. And the thing that we were most concerned about that contributed significantly to the downgrade was the missing production rates.
Yeah, I mean, this company burned through $3.5 billion in cash last year, and there's just $12 billion in revenue.
Yes, it's a pretty significant burn. But I got to tell you something, we've always expected Tesla to use cash. It's in a very aggressive growth mode, so they were going to have to borrow even if they hit those numbers.
So to what extent, in your view, are these solvable problems? And then what's the timeline from Tesla's point of view?
The big problem is hitting the production rate. Now, that's an issue that they should be able to address. Whether they're going to be able to do it or not is another story. But it's really hitting that 2,500 per week run rate and showing that it's sustainable, not just that they sprinted in the last week of a month or so. And then they've got to stay on track to hitting 5,000 a week.
And that's in just the next quarter, because the company has said 2,500 by the end of March.
Correct.
And then 5,000 by the end of June.
Yes.
And will Elon Musk being more on top of it than he has been help? Again, we go back to that tweet yesterday where he joked about bankruptcy. And I just thought, given the real concerns in the market with the debt trading down, I think it hit 85 cents on the dollar yesterday, the most recent debt offering that it did last year, to joke about that just seems illogical and foolish. My words.
Understood. Understood. I can't really comment on that, but they've got some serious production issues to sort out.
So if they don't solve these issues, I mean, how dire is this situation looking years into the future? Is it possible that Tesla might not even exist? I mean, 5, 10 years down the road? How bad is this if they don't fix these problems?
Well, on that point, I really have to defer to the rating. I mean, if we thought that a liquidity issue or an insolvency issue were imminent, we'd have taken the rating down even lower.
Sure. Right. But how does this happen? I mean, you look at you look at these cases where you have a company not generating much revenue, not making any money, and yet the market values it so highly, so much more than a company that's so profitable in the auto business. So were you questioning the valuation as you studied the fundamentals?
The valuation really wasn't a significant issue. The valuation is based on the equity market's expectation for long-term gains. I mean, they were viewing Tesla to some extent as potentially another Apple or another Google.
Right.
But the debt is based on, and you know, the rating in terms of having the debt is based on whether or not this company is going to be able to pay it back, right?
Absolutely. And that's a function more of the fundamentals of the business. If you take a look at the value of Tesla right now, Tesla's got 2 very competitive luxury brands. They're very profitable, very competitive. They've got a 3 that basically the consumer reports and all the valuations are still very strong. And if you take a look at where Tesla is right now, frankly, that's where a lot of the other auto companies hope to be in 4 or 5 years down the road, and they're spending lots of money to get there. The point being, there is some value in Tesla. We're not really looking at the equity valuation, but from a brand standpoint, there's something there.
As an auto analyst, which is what you are, do you find it difficult to even evaluate Tesla using the traditional metrics? Because to your point, I mean, it's looked upon in the market as a technology company in many ways, and runs into many of the same issues, whether they be production or others that technology companies have had with their products coming to market. So do you find it difficult to compare and contrast it as an auto analyst with the other companies you follow?
No, it definitely presents some challenges. But one of the important things in doing that kind of analysis is not to look just at the numbers. You also have to look at the competitive position, long-term demand, where this industry is going. Those are certainly very important issues. We also have to, frankly, take into consideration Tesla's ability to go to the capital markets. That's a reality. We didn't place a tremendous amount of value on that and overweight that, but it's certainly something that we recommend, that we recognize.
What kind of money raise do they need to do in terms of additional borrowing in the short run?
Okay, we think it's somewhere in the neighborhood of $2 billion.
And the August 11th publication of Grant's Interest Rate Observer,
Right.
Jim Grant took inventory of the bond market's accommodative stance. So how come the bond market is so accommodative on this and not seeing what you're seeing?
Give me that
In
again.
other words, Jim Grant says he took inventory of the bond market's accommodative stance to the offering while Tesla was conducting its investor roadshow, and drawing a parallel, basically saying, why are markets so open to all of this debt coming when, in fact, we look at the revenue numbers and the burn rate, and it's hard to believe that it's able to pay it?
I believe that when we first rated this, we rated it, the company a B2 and signed the bonds a CAA1. The bonds actually priced tighter than that, and I think there was some degree of the euphoria slipping into that pricing.
Is it possible this company looks like an acquisition target, turns into an acquisition target? I know that this is Elon Musk's baby, or one of a few that he's given birth to. Is that a possibility? But because again, the valuation seems so extreme, even with the stock comp losing about a third of its value recently.
Yeah, certainly it's a possibility. It's not something that we are expecting or counting on, but as I mentioned earlier, there's certainly some fundamental value in Tesla with their brands and their position in this market. This is a very important market. The battery
Probably
electric vehicle
think about it
market.
more if
has
it
a
wasn't for Musk. I'm sorry, but to Dagan's point, is that because of Musk that he would never sell his?
I can't really, like I said, can't really comment on that. What I can comment on, though, is there is some fundamental value there, and that's certainly
It's an important question.
Or an acquiring company, the CEO of the buyer wouldn't want to work with him. I'm just saying. Well, I mean, what of it? Because he's a creator, he's an inventor, he's a founder.
Yeah, he's a founder.
But you know, Apple has a lot of cash. If it won't buy Netflix, maybe it'll buy Tesla.
Yep.
I'm just.
No,
No, I understand.
Meanwhile, there's GM. This morning we've been reporting, Bruce, that GM is going to stop reporting monthly vehicle sales numbers. They say that the 30-day snapshot doesn't accurately reflect the market. Analysts say that the move could obscure broader trends. What's your thought on getting less information now on monthly auto sales from GM?
Okay. On a monthly basis, there's a considerable amount of variability from month to month. And it can have some information which may not be as informative as you might like. So from our standpoint, moving to a quarterly basis is really not going to obscure either the transparency or the usefulness of those numbers.
How's the auto sector doing in general, in your view? Or can you not look at it as a sector? You got to look at individual.
No, you can look at it as a sector. As a matter of fact, we just took our outlook for the global industry from negatives to stable just about 3 or 4 weeks ago. And it largely reflects the fact that we think that global growth is still going to be pretty good, about 3.4%. In the United States, the economy looks good. We're expecting growth of about 2.7%. And the thing that contributed to our negative outlook was concerns about the discipline that would be demonstrated by the auto manufacturers in the U.S. market as it plateaued. That discipline seems to be there. So you put all that together, a relatively disciplined behavior on the part of the auto companies in the North American market, continued growth in China, continued growth in Europe, and a relatively healthy global economy. It supports a stable
How do
outlook.
tariffs fit into that narrative?
Tariffs are tough for everybody.
Yeah.
And one thing for context, for over a decade, the auto industry has been moving to a build where you sell mentality. That will help modify some of that difficulty coming from tariffs, but at the end of the day, it would certainly be negative for the industry.
All right, we will leave it there. Bruce, great information from you. Hope you'll come back.
Okay, thank you.
Thanks so much. Bruce Clark from Moody.